What's going on, everybody? It's Jeff here. Welcome back to the channel. The bloodbath is continuing. Monday, we saw a strong start to the week. The market was retracing, starting to go back upwards as investors' worries were a little bit relaxed. Bond deals were retracing and they were shifting their money back over into the market. Tech sector has been leading the sell-off. The Nasdaq currently is down almost 3.25% as I'm looking at this moment. We have officially hit new mark that leads us officially into a correction right now. It is that 10% down from the high mark. We're going to talk about in this video where I see this market exactly going for the rest of 2021. Okay, also why today, what happened today that led to the huge sell-off. I'm also going to be talking about AMC Stock. I'm going to give you guys an update because I haven't done that in a couple days. So stick around, you're not going to want to miss this. For those of you that are new to the channel, hitting that like button would really be appreciated. Consider hitting subscribe as well to join the family if you are interested in joining our private community. First link in the comments, we would love to have you over there. Let's get into the video, guys. First off, right now, we have finally hit a new mark, okay? So a market correction is defined as a 10% retracement, and today we have just hit that. If you look, let's go back over to the 6-month chart. If you look, our high was 14.1. Currently, we are 1,410 points off away, 10% off that high, which we are now into correction. Even if you look at this right here, 3 hours ago from this article posted by MarketWatch, Nasdaq perilously close to the 10% correction mark. Well, we have officially hit that, okay? Where do I see this market continuing to go? I expected sometime in 2021 to see a 10 to 15% correction. I did not see it going any further than that for a few different reasons. One, vaccinations coming out, more stimulus was promised, economy starting to reboom, and the most important thing is that the Fed had stated that interest rates would stay low, meaning the easy money would still be here. All right. They talked about that. They were not going to, think about raising it until halfway through 2022, possibly the end of 2022. And I figured 2021 would remain golden. I thought that the S&P would rise about 15%. I still see that happening by the end of 2021. The S&P has not retraced nearly as far as the Nasdaq. Nasdaq is made up of heavily tech stocks, and that has just really led the sell-off. Okay. So today, let's talk a little bit about what happened. All right, Federal Chairman Jerome Powell had spoken. Investors seemed like they were slightly optimistic about it, and then all of a sudden, once he was speaking, that really just retraced. I want to just highlight a couple of points. Inflation is the biggest thing they're talking about. I spoke about this in my last video. Inflation has been declining since the late 70s, and investors are worried about inflation starting to increase. Basically, what is going to happen they're worried about is, considering Americans have had so much time huddled inside and American savings accounts are really, really high. Spending has been low. Once the economy reopens, once this vaccine gets really out there into the communities at a much higher rate, restrictions get lifted. It's just going to be an influx of spending all at once, which is going to cause inflation. However, Jerome Powell had stated that it is not something to be worried about, okay? If there is a slight bit of inflation, it's okay. Long term, you've got years ahead of you. We've been declining since the late 70s, where the 60s and 70s were really high inflation. You can go research it, look it up. It will eventually start to curve back and lead into it, but we've got years ahead of us and you should not be worried. However, what did investors hear? They hear the word inflation and they just got worried. They're not believing him, okay? That's kind of how I'm taking it, and just by looking at the market, that's how investors are taking it. They're not believing that inflation isn't going to matter. So that's a really huge thing for the pullback, okay? And they also talked about interest rates potentially going up. That's not going to happen for a while. Stimulus has had a little bit of pullback. On Saturday, it passed through the House. Right here, it says that the checks for 16 million Americans will be tightening. 11.8 million adults and 4.6 million children will no longer be available for the stimulus. That is what the Senate has proposed, which is now going back towards the House. We're going to wait to hear news on that. We're still on the March 14th deadline, okay? So where specifically do I see this market continuing to go? I'm continuing to see it to rise by the end of 2021, we are only at a 10% pullback from the Nasdaq. All right, the S&P 500 is a little bit less. I wouldn't be surprised the rest of March there to be a little bit of volatility, some high days, some really good, 1.5%, 2.5% gains, and then back to that pull off for a little bit of time. So if I could make a recommendation, continuing to add to your positions, diversify your portfolios. Selling right now is only securing to lock in a loss. Okay, when I was a young investor years ago, my father used to always say to me, Jeff, I always ride through these corrections because I continue adding to my positions, and eventually traditionally stocks trend up. Okay, look at the last 30 years, stocks trend up. I don't see this being a huge market crash, and that stocks will never reach their highs again. Apple will never touch 145 again. Tesla will never touch 900 again. I don't believe that. The tech sector has been really highly inflated over the past year, especially because of all these new changes, everything going remote. However, the technological era is still at its infancy, and these stocks will continue to rise. Okay, so just if I can ease a little bit of your worries, trust me, my portfolio is bloody red, especially since February 11th when this all started. But I'm continuing to add to my positions a little bit slowly now. I did a little bit stronger about a week and a half ago, but let's just ease some tensions, guys, because this will eventually turn around. This too shall pass. Now let's get into what I wanted to talk about in this video mostly is AMC stock. We've seen a good start to Monday. Same thing, up high, hit that 933 point. Started to consolidate a little bit, and a little bit of the sell-off. Currently, it's sitting at 774. We're under that 801 mark that we closed last Friday, which was huge because the amount of options expiring in the money at that point, which is awesome. A couple things I want to talk about is, one, this consolidation here is pretty normal, and the sell-off is continuing just naturally of investors pulling money out of the market. Okay, if the market was starting to rise and so forth, and AMC was selling off, especially at this point, I would be a little bit concerned. However, it's the market as a whole, so we cannot pinpoint on this. Okay, I will tell you that AMC theaters are continuing to open up at a much faster pace, which is awesome right now. All right, if you look over at the vaccines, they still plan on, 2 million shots per day. They want that 20 million mark by the end of March. I think they're going to be on that. If you look at these states, especially where I'm in, it's crazy. It's over 20% for the one dose, which is awesome. But many states have two doses at that 8-9% level. One dose is up around the 15 or 12 to 16% range. So it's really getting penetrated in the market, in the population, and these states are going to want to continue to open, as well as AMC theaters are continuing to open, which is just naturally a good sign. I also want to point this out too. This was an article by the Motley Fool. It just came out today. It says the U.S. government is vaccinating over 2 million Americans per day, which is awesome. Okay, it could reach herd immunity by June because of vaccinations and the natural defenses that previously infected people that have developed. This trend is great news for AMC, which relies on people visiting its theaters to generate revenue. That's awesome. A lot of movies that were held off, one of them being specifically, that I was a huge fan of, I wanted to see last year, was Top Gun. Is not, but many movies that were held off and postponed are going to be, brought back into theaters, which are going to be released as well. And naturally, lots of individuals who have been cooped up for a while are going to want to get out to the theaters. So good long-term news for AMC. We're still strong on that. It is still trending to go in that direction. Now let's look at the short-term news. Okay, couple things I want to highlight. Options volume has decreased. Okay, it's now still sitting up high. I say in all of my videos, Apple is normally always one. Option volume has increased or decreased a little bit. The call volume was at about a 4.5 to 1 ratio. Now we are seeing the shorts are actually at a higher ratio, 58.8 over 41.2, and naturally the volume has decreased. So individuals, whether it's institutional institutions or retail investors, are continuing to short this stock at a little bit higher pace of what they were. I also want to point out the fact that the short interest is sitting at 250,000 short shares available. That did get as low as in the single thousands. I think I saw 7,000. I think I saw some screenshots for 3,000 or 5,000. However, 250,000 is very, very low. And the short borrow fee rate, which is listed right here, is continuing to rise up at a 9.85%, which is a good size for anyone that is continuing to hold. Lastly, guys, I want to point out this. All right, my Ortex I was not able to log into because I'm using a different computer right now and it is not saved. However, the utilization rate is hitting a 98.2%. It was just at early of February where it was at that 93% range. So that utilization rate getting closer and closer, okay, to that 100% is going to be good for anybody being able to hold on. And what that utilization rate means is shares that are just available towards the public, which means when they're available towards the public, they're available to be shorted as well. Okay, don't look at it at any other that. It's just a good sign that those shares are available to be shorted. What makes them not available to the public would be shares that would be, privately secured for employees. Okay, I know individuals that work at an area where I'm from in Stanley Black and Decker. I point this up. You can buy shares at a lower cost to them. Those are restricted shares. That's all the utilization rate means. But breaching that 100% means the shorts can access those shares as well. Okay, which is a good sign for us because eventually they're going to run out of shares unless they start to cover. Failure to deliver rates are continuing to increase, which is a good sign for AMC holders. By the end of this week, I was hoping we would get to that $10 to $11 mark by Friday. I did have an $11 call that I still hang on to. I'll just let it expire if it does not if we don't hit that point tomorrow. I would expect to see it, maybe the stocks, overall the whole market tomorrow to be pretty, pretty slightly down or just, pretty consolidated. A lot of individuals, day traders are going to get away from the market on Friday. Okay, but AMC for the end of the week, if we can continue to hold above that $8 price point, will be good for the week. Okay, still looking at this, guys. We were at 550 just a couple weeks ago, so that's already a 60%. Well, yeah, 65%. No, sorry, 60% gain in a short period of time, which is good for us. Okay, so if you are continuing to hold and you can afford to hold, continue to hold. If you're not, don't. This is still a very volatile stock, so make sure you do your own due diligence, guys. That's it for this video. I will see you in the next one.